All right, let's talk about why you need to be doing stock paper trading before you invest any of your money in the stock market. Don't forget to click subscribe below. We cover things like dividend investing, stock analysis, mutual funds, ETFs, and other financial topics like how to become debt-free. All right, so let's talk about what paper trading is. Paper trading is simply using either an application, there's a few different ones out there and we'll cover those further along in the video, or something like Excel to basically do fake trading. And there's numerous benefits to this, so let's cover those now. So the first step when beginning to paper trade is research stocks. I have a number of videos that cover how to research stocks, but you have to have an idea of what stocks you're going to paper trade before you can actually do it. Let's talk about the main benefits of paper trading. The first benefit is it's a free education. You are researching a stock, you are determining when is the right time to purchase that stock and when the right time is to potentially sell that stock. And because you're not using real money, there's no risk, and that leads us to the second benefit. There's no risk to doing this. It's either a free app, the app doesn't cost any money, or you're using Excel or Google Docs, spreadsheet, things like that. Things that cost absolutely no money, so it just takes a little time to set these up. You can begin paper trading and learning how to invest in stocks. And this leads to the last benefit. You can absolutely not lose any money. And obviously, you cannot gain any money at the same time, but the whole key to this is you're gaining an education. So when you do trade your hard-earned money to purchase shares of stock, you're comfortable on why you're purchasing the stock and you're doing it for the right reasons. So there's two apps I recommend. There is one by MarketWatch, and I'll put the link down below in the description. And then there's also one called thinkorswim, and that's owned by TD Ameritrade. I've used that one years ago. I don't use it anymore when I'm testing ideas and trades out. I actually use the MarketWatch one. I prefer that one these days. I think the thinkorswim is actually only a 60-day free trial now, and then they try to push you into opening up a real trading account. But first, you can complete this in 60 days. You can get a feel for how to research stocks and actually perform some research, perform some paper trades in your first 60 days, or just use the MarketWatch one or use Excel, which are both free. So let's talk about how you should paper trade. If you're just a beginner, paper trading, the first thing you should do, like I said, research the stock, determine when is the right time to buy, and then you execute when you reach that dollar value, whenever the stock is at whatever threshold you set is the right time to buy. So then when you own that stock, then you're going to continue to do your research and see how the stock's doing, read the news about what's occurring to the stock, listen to the annual reports, read the annual reports, attend the conference call, read or listen to the conference call recording. This is all things to, yes, you bought the stock and maybe you did purchase it at a good time, but then that's when the real work starts of continuing to learn about the company. And by doing this, you'll also learn when the company tends to increase in price, the stock price, and when, different factors that make the stock go down, when they're struggling, when there's a certain type of economy going on, when what competitors are coming in, what risks that the company faces in the upcoming year. They often talk about this on the conference calls or in the annual reports, things like that. So basically, you do your ongoing research and ongoing due diligence to make sure you still want to hold the company. Now, the last piece of this is determining when you want to sell. Some of us are investors that will buy a stock and hold it nearly forever. We buy great companies and we hold them forever. Some of us are, in for a medium term to short term trade. So, you're pretty much trading in and out of these stocks and you have to know when the right time is to do that. Okay, then once you sell the stock, you can basically what I recommend then is complete a journal and record what made you buy the stock when you did buy it, what information you researched while you held that stock, and ultimately, if you did sell the stock, what made you sell it. This journaling is key because you can look back over a period of years, and I recommend you do this even when you're trading real stocks with real money. Always journal that same thing. What made you buy it? What information you learned while you held it? And what made you sell it if you did sell it? Or what made you continue to hold on to it? Over a period of years, you build up a book of knowledge in that respect in your journal, and it's invaluable. You'll see patterns that repeat themselves. You'll see deficiencies in your logic, and ultimately it can make you a better investor long term. All right, thanks for watching today's video, and like I said, if you have any questions, feel free to comment below. I'll be sure to answer your questions, and don't forget to subscribe to the channel.